Start recording. So sit back, hold tight, because this entire session is designed to be live. So I'm being put on the spot here a little bit to try to go out and find some opportunities that might exist in the market today. Trading conditions are not always ideal, but I'm sure we can find something. All right, so first and foremost, let's go through something that was spotted last week by a student. This is one that we traded as actually by me, but one that we had traded with my students last Thursday. This would be on the dollar Swiss. Somebody just asked a question here about the charts that I just had up. These charts that I just had up in here, let me just kind of bring it back down to earth here. Essentially, a lot of my work, whenever I start doing any swing trading, pattern trading, a lot of it has to start off with looking at my charts that I trade. I trade a lot off of 1 hour charts. I know some of you trade off 4 hour charts, daily charts, and even shorter term on 5 minute, 1 minute charts. I always like to start off by kind of just looking at what the overall flow has been. Like if I'm trading off 1 hour charts, I'm kind of looking at what the overall trend has been. A lot of times I'll start off looking at my charts versus the dollar. Like here you see the pound dollar. Pound came up quite a bit last week because of the elections of the vote in for Scotland, Scottish independence, if you will, the William Wallace vote for freedom, if you will. Pound has kind of made some higher highs and higher lows. This was all during the voting period, and then I actually told my students last Thursday that, you know, I felt that when the pound came up to these levels, which is right next to its downtrend line, that it would probably come down and follow what the overall dollar has done, which that was a guess that I got right. That was certainly a guess. It was an educated guess, but it was certainly a guess. But you see a little bit of dollar weakness on here, but on the euro dollar, you see continued dollar strength, euro weakness, dollar yen, dollar strength, yen weakness. Dollar Swiss, you see a bit of dollar. This is one that we'll be looking at. You see a little bit of consolidation occurring on the dollar Swiss, but it's still showing overall a little bit of dollar strength. New Zealand has been consolidating a little bit, still showing some dollar strength. Aussie showing dollar strength, and dollar Canadian is one that's showing dollar weakness. This is another one that we'll be looking at here in just a little bit. So with that being said, let's go ahead and just do some review from something we had found last week as a class. One that I've been certainly bullish on in the past. This is one from that we've covered before. So I want to just make sure that we cover it right now is the Gartley pattern. This is one that I know a lot of you get some confusion on. Right in here, this was the FOMC announcement last week that favored the dollar. So we had this big impulse move up on the dollar Swiss. So what we had here on the dollar Swiss, this is a trade from last week as a class, is we had an impulse move with an A. The A comes down to right to 61.8. Some people are asking why I didn't start it from here. And the reason why is because when you go to the left on the chart, this little move right down in here, this is when the dollar Swiss actually made higher highs. So I look at this as being kind of the main impulse move that went along with the FOMC announcement. Here's our B. And here would be our C correction. And remember, we're looking to be buyers. So this is almost a perfectly formed Gartley because the A comes down to 61.8%. Is the end of A, the start of B. The B comes up and ends between 38.2 and 88.6 of A. And then the C comes down here to hit the 78.6 level. All right. Now, what we also see here is that, and one of the reasons why I brought this up is obviously this would have been a successful trade because you're a buyer at the 78.6 level. You put your stop. You can either put your stop 1 pip below the low. We had actually chose to put our stop a little bit lower and look for a 1-to-1 risk reward off of this stop down in here because of the fact that we were going to risk about 50 pips to make 50 pips. So when we look at this trade as a whole, no matter where you put your stop order, you wouldn't have been stopped out. You would have looked for, based on your risk, whether you put your stop here or over here, you would have been looking for a 1-to-1 risk-reward ratio, at least for half of your position, and then getting out of the other half of your position at the 78.6% retracement of the pattern itself, which occurred right up in here. When you look at this trade, this is actually, we've been, the dollar's been absolutely crushing it. I have my global view up in here. The dollar's a little sold off today, well offered, but the dollar has been cranking it out over the past several weeks. The dollar's been reaching some extreme highs versus other currencies. So this was a buy. Now the question that always comes up here on the Gartley, because whenever a Gartley forms, generally speaking, we're looking to be buyers at the 78.6% retracement level. Now with PitView, with the pair view, since I'm trading off a 1-hour chart, I would be looking at the 1-hour T, 1-hour totals, because this can either get you into the trade earlier or it can get you into a earlier entry. Because sometimes when this comes down near the 78.6, it won't actually touch it. So if we're looking to be buyers when it touches the 78.6 level or makes a touch and a bounce off the 78.6, oftentimes we can get, the move occurs before we actually enter into the trade. So we get a large move up, even though it doesn't hit the 78.6 level. But it can also get you a later entry, which would equate into a better entry, better entry price, if you will. In the case of a buy order, which this is, in the case of a buy order, it would equate to a lower entry price. Remember, we're still looking to buy low and sell high in these markets. So when I say lower entry price, actually the parameters that I use on the 1-hour chart for pair view, the parameters for entry, and let me just go ahead and list these out. For long-term trades, which would be 8-hour, 8-hour trades, if you're looking at 8-hour time frames and up, a lot of times you can just look at pair view, and if you just look at it as being either green or red. Now you see my pair view right down in here, like I'm showing the 4-hour totals right down here. This is something to where, if it's, the buy and sell imbalance, the number that's in this screen is what we're looking for. When you're looking longer term in the market, the more market maker action that you're taking into account, a lot of times those imbalances are going to go down the longer time frame that you get. Because remember, over the long run, market makers like to be as close to 50-50 as possible. So the longer term you look on the pair view, if you're, sometimes it can be just as easy as just green or red. If the long-term entry goes green, then I'm getting in. Medium term, which is the chart time frames that I'm looking at, so I'll put a little asterisk by this. Medium term or swing type of trades, which would be, 1 hour to 4 hour. What I look for, and it's in this number right in here, what I look for my entries is either a +5 imbalance, or a -5 for sell orders. So +5 would be buy orders, or -5 would be sells, so buys and sells. And then short term, you can actually look for larger imbalances to occur. For short term, which would be 1 minute to, well, most people will trade off of, 1 minute to 15-minute charts, anywhere in between. You can look for a +20 for buys. That's always a good entry, or a -20 for sells. All right. So coming into this, when I say, whenever and this goes into, exactly what we look for. I know most of you are probably pretty astute traders. So when it comes to overall pattern trading or support and resistance trading, consolidation breaks, which we'll talk about these here in just a little bit. There's a couple of scenarios here that work out in our favor today. One of which is a little bit, we're a little bit late to the party on, but we'll still make do. So looking at my 1 hour charts, when you look at the totals in here, what we're looking for is a +5 or a -5. And when I say that on the entry price, a lot of times I would look at the Gartley pattern. Since it's kind of a counter trend trading method, you're looking for a reversal of the most immediate trend, like in this case. A lot of times I would put my entry right here at the 78.6 level. Okay. Oftentimes it can come down, and on Gartley patterns that tend not to come to fruition, it will come down and stop me out. And a lot of times that can happen, that whipsaw effect. But what I found is, as it comes down close to those 78.6 parameters, if we look for a +5 to occur, so not buying at the 78.6 level, I look for a +5, a +5 to occur on the 1 hour time frame. Oftentimes I can get in at a better price. For example, instead of buying at the 78.6 level, which you see here would be at like 0.93475, you actually got in on this. It actually went to +5. It didn't even go to +5 here, by the way. It went to +5 like right here, to where it would have gotten you in about 8 or 9 pips lower without it coming down and breaking the 100%. Where you could have gotten into a strong buy at a better price, but when you buy at a lower price, it gives you even a higher risk-reward ratio. The reason why it's giving you a higher risk-reward ratio is because you're just risking this much, if you put your stop here, or this much if we kind of went outside the box a little bit and put our stop below this low in here because it was right below the 9,300 level. It gives you that higher risk reward potential on your trade, because you're risking less from here to here than you are from here to here or to here. So you're risking less pips on the trade. That means you can either do more lots on the trade, but you're risking less pips because you're getting in a better entry. So right down in here is where we actually would have entered if we were looking at the pair view. Now, either way, no matter if you use PitView as an indicator or if you used, just the 786 as an entry, obviously it would have been a successful trade. It's just, when traders ask me what the benefit of PitView is, it's the fact that when you buy and sell on these Gartleys, oftentimes you're, again, you can have quite a bit of it takes quite a bit of intestinal fortitude to get into these trades sometimes, because you're buying into a trend that's immediately down. Now, one other thing that you'll notice here is right as it comes down past the 78.6 level, speaking of patterns, is it also makes, most people would call this down in here, and it's a little bit clearer on a 5-minute chart, but I generally wouldn't even go down because you can see it. We also get a head and shoulders bottom that occurs at the end of this little downtrend. Head and shoulders bottom being a reversal pattern. So this is a little head and shoulders that forms in here with the neckline. When you connect the neckline coming through, neckline actually would have been through here. Could have gotten you in on a 1-to-1 risk-reward ratio trade. However, you would have looked at this as a whole. These are two patterns kind of coming together, to where if you used just the +5 from PitView, seeing that there was a Gartley and a head and shoulders bottom forming, you could have gotten in way earlier, when you combine different patterns together. So that's one that obviously came to fruition this past week. We reached a maximum reward potential on that trade. That brings up, other potential. A lot of times when I'm looking at past trades, because there's also a fundamental part of me on the Euro and the Swiss. As market analysts for PitView, obviously we like the fact that we were able to trade along with the market makers. However, I'm also a fundamental guy, and the reason why I look for dollar Swiss to go up as much as I do is because of the fact that it trades in correlation with the euro-dollar pair. And we all know that Mario Draghi is freaking out right now, looking for opportunities to short, to make the euro weaker, which also makes the Swiss weaker, which would make you look at the dollar Swiss as going up. Other trading strategies we've covered in the past, when you kind of combine these things together, this is something I was looking at this morning because I was looking at dollar Swiss. That could be a good buying strategy for today. Is the fact that when you look at this, it's making kind of a pennant formation on these 1 hour charts. You see this? This is another pattern right in here. This is called a pennant formation. Today's possibility on dollar Swiss, it is forming a pennant, or you could call it a symmetrical triangle. Now this is, I'm not using the global view or the group view. This is just something that's another pair that I look to trade. We all have our pairs that we like to trade, and then you can use global view and group view to look for pairs that that might also, you know, be good for us today, right now. But this is one to where I think that we have a symmetrical triangle forming right in here. We also, you see the trend lines that have formed in here. We have 1, 2, 3 points on the downtrend line, 1, 2, 3 points on the uptrend line. This is one to where when you look at it from a trading perspective, what I would look for on a buy entry, and let me pull up dollar Swiss here on my 1 hour time frame. Let me pull up. Since I'm looking at this separate, a lot of times I'll just go straight to pair view. So let me pull up another pair view window, and I just need to change the time frames. Let me change that to a 1 hour. And I don't like a lot of this noise to be on here, so essentially what I'll generally look at are the 1 hour totals. You can see what I do on these. All I care about are the totals, and I also need to change the symbol. So I just right click on that. I'm going to change this over to dollar Swiss. There we go. Apply it. There we go. So right in here, when you look at dollar Swiss, this is when I got a 4 hour pair view up here. I know I got a 4 hour on there, but I got a 1 hour on here also. We're going to look at a couple of time frames here today. So it's showing a buy-in balance on dollar Swiss of a positive 2.9. Now, this is one to where when we look at the overall dollar of how it's done on the charts, we're bullish on the dollar. This is also one where we look at these 1 hour totals right in here on our 1 hour charts to confirm what direction the market makers are taking. See, if this breaks this lower trend line and it's showing a positive imbalance on the 1 hour time frame, and here, let me take this off for a second. I'm just going to pull this over here just so you're not focused on all this noise up in here. So let me just bring up this 1 hour total. So looking at this 1 hour total in here, obviously if it breaks the lower end of this, you know, this is something to where I'm not really going to be looking to be a seller. One of the reasons because the actual buy-sell imbalance on this 1 hour time frame, even though it's going down, it's showing a positive imbalance. So let me bring up my notepad again and put this over here and kind of go through my strategy for today on the dollar Swiss. So strategy on this for buy entry, there's two things you can use for a buy entry. So a break through the upper trend line is what I would look for in a buy entry. Break through the upper trend line, either a lonely bar break. If you remember our lonely bar method, that would be waiting for an entire candlestick on the 1 hour time frame to completely close above this trend line. See, whenever you have a valid trend line, if you look for an actual candle to close completely above this trend line, that would be a lonely bar break. That would be a valid buy entry, because you're confirming that an entire candle has formed completely above or below a trend line. What that means is the open, high, low, and close of the candle is completely above the trend line. Or when it breaks the upper trend line, looking for a positive 5, +5 in balance on the 1 hour totals, 1 hour pair view total. This is what can often get us into trades a little bit earlier. If this just breaks this trend line, the candle doesn't have to necessarily close above it, but if it just breaks this trend line right in here, then and we have +5 up in here, we can look for this to move. You can see it's already going on the 1 hour totals to +5, but it's still consolidating sideways. If we get that +5 to hold and we get any type of break, and you don't have to wait for a candle to close either. That's the beauty about PitView and what it does for you, is that you don't necessarily have to wait for a candle to close. You can just wait for if the pair view totals are showing a +5 on the 1 hour, that's a big buy in balance for a 1 hour time frame. That should give you the comfort level to go in and buy this. So look for that here on the dollar Swiss, because we're getting that symmetrical triangle, that pennant symmetrical formation. So I think this would be a good solid trading opportunity on dollar Swiss to trade it to the upside. And that's just a pair that I normally look at. Euro dollar and dollar Swiss have been getting the euro and the Swiss have both been getting their butts whooped in the markets. So those are two that picking my pairs get kind of easy on, because it's you kind of already have a view of what direction gives you a good solid entry point. Now, as far as where we put our stop on this, so the buy entry. So as far as the stop order goes, when you have a symmetrical triangle such as this one, the minimum that you would want your stop order would be below this trend line over here. Now, since this is a symmetrical triangle, what I might look at on this, if you're looking for more pips on the trade, is you can look to put your stop below this low right in here, the low of the pennant formation itself, because generally when this breaks out, people would look for this to break out by the length of the triangle. So putting your stop below this low of the pennant formation, that would actually be probably a pretty good stop point. So low 0.933, so this would be at least 1 pip below that, 93322. 1 pip below the bottom of triangle. And then the limit, depending on where you would get in, would be put at a 1-to-1 risk reward. We can revisit this, because if it executes here, we'll execute it. We'll execute it as a class. So limit of 1-to-1 risk reward would obviously put us in a good situation on dollar Swiss. Now, the actual risk to reward, if you look at where the top of this pennant formation is, the top of this trend line, if you will, that's looking at 0.94. You're looking at probably about 70 pips worth of risk, or at least 60-something pips worth of risk. So, looking for that break to the upside. This is not a trade that would last just 2 or 3 minutes. Obviously, it's going to take some time to come to fruition, but I think that would be a good solid trade idea. Now, you look at the buy imbalance going up here, right now it's already meeting our PitView parameters of being at a +5. All we'd be waiting for now is just any type of break above this, the top of this triangle at this point. Remember, if it's already meeting your PitView parameters, you just look for a break above the triangle, and you're in good shape. You're good to go, if you will. So here's a little review from last week of a dollar Swiss trade that we had. I'm going to go ahead and diminish that chart for a little bit. And I'll zoom out a little bit so we can kind of keep an eye on that one. There we go. Maybe zoom out a little bit more. There we go. We'll keep that the same as the other charts. Now, another one that I was looking at today, as far as possible trade entries, if you will, I think that there's several on here, but I was also looking at the fact that when you look at global view, now a lot of times when I'm looking at like global view and group view, even though I'm trading off, in this case, a 1 hour chart, 1 hour time frame, you see that at the bottom of the list here, for the last 4 hours, the Canadian has been getting its ass whooped. Sorry, excuse my French. The Canadian dollar has been very much well offered over the last 4 hours on global view. So when I double click on Canadian, obviously it's going to bring up the 4 hour totals and show me that the dollar Canadian has had a huge buy and sell imbalance also on the 4 hour totals. What I can also do down here is I can change I'm going to go ahead and change since I'm trading off a 1 hour chart, I'm going to go ahead and change that to a 1 hour time frame. There we go. And I have my dollar Canadian parameters up in here. When you're looking at pair view, if you will, when you're looking at the PitView indicators, obviously we can see currencies that have been getting rather strong, that are strongly bid in the market, and then it ranks them from the most well bid currencies to the most well offered currencies. So we have pound here at the top, we have Canadian down here at the bottom. So you're looking at the bully being the pound has been the most well bid today, and the wimp is the Canadian, which has been, that's the bully, and then the Canadian's been the wimp. I've already looked kind of through all of these, so I double click on the Canadian, and you can see on the Canadian is the weakest over the last 4 hours versus the dollar. And so I want to take a closer look at the dollar Canadian chart on here. And I'm going to go ahead and zoom in because this is another one that's, unfortunately, when I was looking at this morning, I was looking at it, I woke up at like 4 in the morning, and it was, at this point in here, it was breaking through another type of pattern in the market. When you look at dollar Canadian coming down like this, you see that we have a shoulder, and then a head. We have an inverted head and shoulders pattern here on the dollar Canadian pair. When you look at this as a whole, when you connect when you're trying to connect the neckline, if you will, you would go from the peak, whatever the peak is on the left side of the inverted head, to the peak on the right side, and you can see that when you connect that, your actual buy entry is right in here. This is when it breaks kind of this inverted head and shoulders formation. If you look at it compared to other things that we've talked about, now the point is here, folks, so sometimes you just got to use common sense, is that what is it also doing? When you go in and connect the trend lines in through here, at the same time that it's breaking through this inverted head and shoulders formation, you see that it's breaking 1, 2, 3, we have 4, 5, 6, we have 6 points in a trend line in here that makes this a really valid downtrend line. So not only is it breaking, this inverted head and shoulders is is another reversal formation in the market. And at the same time, it's also breaking a trend line. So in this case, on dollar Canadian, we may be a little late in the game on this, but I don't think it really matters. Not only has it broken through, but when it broke through this morning, you look at the 4 hour totals, the 1 hour totals is still showing a +5. On the dollar Canadian, what I think that when you look at where it's at right now, it's breaking through the 110 level. Next resistance is up here at the 111 level. If you were looking for a shorter term type of trade opportunity on this when it comes to the 1 hour time frame, let me pull up the 1 hour chart. This has already given us a buy signal, and it's still given us a valid buy signal. Now what I want to do here is just kind of show you another way that we can utilize PitView, if you will, because this is a trade to where we're a little late to the game on it. And what I mean by this is that this quite frankly, could have already been giving you a valid buy signal all the way up and through here to where you could be 70 pips into the trade based on the parameters that got hit just this morning. But what happens when you're a little late to the game? So what I mean by this is, let me pull this up. Dollar Canadian. We've already had a trend line break plus a head and shoulders, an inverted head and shoulders break. For the buy entry right now, it's already given a valid buy entry, so you would be buying at the market, which right now is at 1.10073. It's already given a valid buy signal. This is a question I get quite a bit, because when people sometimes look at the market, like here in the States, this buy signal occurred whether you bought it through a trend line break or you bought it based on the break of this inverted head and shoulders. Is, Steve, what the hell? I'm late. I'm late getting into this. Well, sometimes you're not late. Sometimes you need to look at several things. For one thing, the stop order. The stop order on this, you can choose to put your stop down here if you wanted to. Put it down here below this peak low. Oftentimes what people will do, though, on an inverted head and shoulders pattern is they'll put their stop right below the low of the right shoulder on an inverted head and shoulders. So this right shoulder right in here, 1.09243. So if you're looking for just a straight up 1-to-1 risk reward ratio trade, this is the minimum in which we look for. The risk on this trade as of right now, you're looking at approximately, sorry, I need to bring up my calculator. So your risk would be about 83 pips. So your limit would be 1-to-1 risk reward. Taking 1-to-1 risk reward off the table when you're risking like 70-something pips or 80-something pips, there's nothing wrong with 1-to-1 risk reward. I never know why people have a problem with 1-to-1 risk reward. It's 100% return on your investment. People tend to get a little bit greedier than that, but in this case, you just got to be smart. So when you're looking at this, this would be 1.10903. Would be your limit on this. So your limit would be put right up in here. So 1.10. So your limit's going to be right up in here, by right below that 1100 level on the dollar Canadian. That's the next resistance level, if you will. That would be putting your limit, you know, it's quite a ways up there, right near a resistance level. So the thing that scares people is the fact that since you're getting into this trade late, you know, as it's already moving, a lot of people would think, well, hey, you know, asking this to go up right near the next resistance level on the dollar Canadian is asking for quite a bit. when you look at the overall market. That's what scares people out of this is, now that I'm getting in and I'm risking this much, because we still have to put our stop orders at decent levels. We have to make sure we put our stop orders where we're wrong. So, putting a risk reward trade on like this, that's at 1-to-1, the fact that it's coming and it's going to be coming up right next to this resistance level right in through here, that might make some people squeamish. So the other thing I might look for on the 1 hour time frame, or after entry, exit when pair view 1 hour total goes to -5. Now, the great thing about this, folks, is that if you were to enter in and you were to use pair view as your tracking tool, here would be normal buy parameters off of this trade. It's already given a buy signal. If we entered right now, we're entering a little late, putting our stop at a decent spot where we're wrong, putting our limit in. But what's something else that can make us comfortable getting into this trade? This would be what we call trade management, because in this case, we're getting into a trade. However, we're going to use the pair view. So all you would need to do is put your pair view 1 hour totals on your screen, like right down in here. And if you're long, as it's going up, if it doesn't come down and hit your stop, but as it's going up, what you can look for is, okay, well, if this 1 hour total goes to -5, if it goes to a red 5, if you will, then I'm getting out. I'm going to go ahead and take whatever profit I have in the trade off the table and just take it off. And that's something that I know can be, if you're not watching your screen, it can be a bit of a pain. You can put these parameters in as a set and forget type of strategy. But what you can also do is, look at that pair view total if you're trading, and if it goes to that red, that would have to be a red 5 on here. Kind of like Star Wars. You remember when they're invading the when they're invading the Death Star in Star Wars? They're like red 5 standing by. That's what you're looking for. You'd be looking for a red 5 standing by in order for this thing to blow up in your face. So that's another thing that you can look for on these, is that red 5 to occur on the pair view. I know a lot of you get confused on PitView as far as because it shows so many damn columns. The thing is that this is the question that just got posed to me, is if you're a swing trader, a lot of these methods that we've been looking at are swing trading methods. And I know when you first pull up pair view, it looks like this, correct? And this is something I've reviewed before, but it does, it makes, good mention to, it's probably worth mentioning this one more time. Is, people look at this and they look at all the numbers and the flashing lights and they're like, oh my gosh, this is like analysis paralysis. Remember, for me, a lot of times when I'm swing trading, I just care about the totals. When you right click anywhere on dollar Canadian, you go to show and hide columns, unclick the session leaders, the session followers, the 15-minute followers, the 15-minute totals, and just keep your session total up. The session totals are going to be your hourly time frames. And then if this still is like an eyesore for you, looking at all the different market makers, then what I do is I just take mine up to where all I see on my chart is just for 100% of the market maker activity, just the totals. And that's a great way to go about it, because you've got a little bit more clarity in what you're looking at. As you get more experience, maybe you can look at the leaders, the followers, you can look at individual market makers, like I said, there's a lot of PitView traders that'll become like market maker groupies, following individual market makers. But until you get to that point, if you just want to go by 100% of the market maker activity, there would be nothing wrong with that at all. All right. So dollar Canadian is another one to where I think we have opportunities on that. Even though, you look at the charts, you may see the candlestick is making kind of a bearish candle at this moment. The PitView is there to help you in knowing that if you're in this, if you bought right now, you're still on the right side of the, where the market makers are. Does that mean the market makers could not start selling right now and make this go red? Absolutely. This could go to a losing trade. Every trade has the potential to be a winner or a loser. This is just one to where, we can get it out a little earlier. If this goes to a -5, this can give us a signal to get out a little bit earlier on in the game instead of being whipsawed in and out of the trade. All right, so dollar Canadian is another one that I like today. Now we can go to some other. Dollar Canadian was based on the fact that the Canadian is the dog of the market right now. it's certainly the it's the wimpy kid in the schoolyard, and it's the weakest when you look at it versus the dollar. Okay, so that's some more little 1 hour swing trading. Again, if you're looking at this on a longer term basis, all you really need to do is just change your parameters around a little bit. If you're looking at 4 hour charts, for example, maybe you're not looking at a 1 hour PitView total. Maybe you're going to look at a 4 hour, or you're going to look at an 8 hour. You can put it up to like 24 hours on this. All right, there was let's see here. There was another one that I was looking at on here. Let's see here. Kind of going through some of these. I'll generally click on some of these totals on here. Pound is the strongest versus the yen. Let's take a look at pound yen. Because pound's been one of the others. It's been a bit stronger here, and the yen has been flying up. We can look at dollar yen also, because the yen is right next to the bottom of the group now also. In fact, it's going negative right now. In fact, let me go dollar yen real quick. Dollar yen, euro yen, pound yen. Those could also be contributing factors. Okay, so pound yen. Pound's near the top, yen's near the bottom. You got pound yen right here at a -3.85. Let me take a look at pound yen. This may have been the one I was looking at earlier. This is making a bit of a pattern in here because you see it's had some resistance right in here. 1, 2, 3 points of resistance. It's also been making higher highs and higher lows in through here. You could call that an ascending wedge, an ascending triangle, if you will, as it's been making higher highs and higher lows on the 1 hour charts. This is another one to where not so much that I think the Canadian and the Swiss are two that I'm looking at today, but we can still kind of take a look at these and see what's shaking. See here, pound yen. Sometimes if I'm doing live trading, ladies and gentlemen, it's just me thinking out loud. Pound yen is certainly a mover. And with the pound being a little bullish today on the top side of the global view, and the yen being very bearish today on the bottom side of the global view, you see that the yen has kind of come down to the bottom side of the equation. This may not be such a bad little little trade right in here. You see that as it's come up, it's kind of had a bit of a trend line coming up in here, and it's certainly formed a horizontal resistance level in through here, to where we could look for a possible buy if it breaks through this high, put our stop below this low right down in here. That would, remember, pound yen is a big mover, so this would be about 80 points worth of risk just by trading this pattern. This is an ascending triangle, which generally speaking is a continuation pattern. The fact that it's making higher highs and higher lows, meaning, we got trending support meeting horizontal resistance. In this case, this would be more of the fact that it's coming in the midst of an overall trend which is up. This could be another opportunity for us to get in on a large volatility trade, if you will, a highly volatile trade. Pound yen can move 100, 150, sometimes pips a day. So this would be another one to where if you get this buy up above here, this is another one that I'm looking at the 1 hour time frame. If pound yen goes to a +5 and this breaks the high, you see it hasn't gone to +5 yet. It's broken the high a bit, but you see it's come down, but it hasn't gone to a green 5 on here showing an imbalance. So pound yen, if it goes to a +5, that might be a good buy entry for us. So pound yen. This is an ascending triangle, which is horizontal support meeting trending. Horizontal resistance meeting trending support. Buy entry. Break through horizontal resistance. And you'd be looking for a +5. On pair view 1 hour totals. Stop. In this case, stop would be put right down in here below this low, 177.435. So 177.435. And limit would be a 1-to-1 risk reward. It would all depend on your entry. So another one, pattern trading, where we're looking at the bully and the wimp in the schoolyard in this case, another way that we're using global view and group view. And we're looking at them on the 4 hour, but we're trading off the 1 hour. This is more of a top-down approach to trading here. So if we can get a break above that resistance level and we can get a +5 here, that might be another opportunity that we'd want to take. But you'd want to certainly look for it to break through this resistance level right in here. If it gets above that resistance line, if you wanted to, you can even put it up against the high. Yeah, if you put it up against the high, the most recent high, you could say, okay, if this makes, you can move your horizontal resistance level up a bit to reflect the most recent high, which was on the recent candlestick, and you still see that looks exactly like a horizontal resistance level. So you can just basically say if it breaks the current high of 178.335, and we get the green +5 on the pair view totals. See the highs right down in here. You can see the highs and lows. That could give us a nice little buy trade. Swilt. Just for giggles, let me also pull up dollar yen, because that's another weak one. Euro yen I'm not a big fan of going long on, but let me pull up dollar yen. We do have a trend line in through here. We've had a lonely bar break through that trend line. Kind of look at this as also being a symmetrical triangle or a a kind of a wedge formation, if you will. This would be consolidation also, because it came up, it kind of consolidated back and forth. It has a trend, it has a trending resistance level meeting up with a trending support level. And this one's already broken out to the upside. Dollar's been crushing the yen as of late. It's been hitting a bit off these support levels. This is another one to where you could, potentially look for an opportunity here. Put your stop below this low right down in here. That would put you at the bottom part of this triangle. Look for a buy entry. Pound yen or dollar yen are both kind of making the same types of movements. Let me see what my good friend dollar yen is doing. So on the 1 hour time frame, it's broken through there. You could wait for this to go to a +5, if you will, and that could give you a buy entry into this. On the 1 hour totals, that just means that you are in fact meeting up with market maker buy and selling activity to where if you bought that, that would give you a nice little buy signal on dollar yen. So this is another opportunity right in here. You got a a nice little triangle that's forming. That was the other one that I was looking at for today. I'd try not to overtrade too much when I'm looking at these. Let me pull this back over to the pound dollar and zoom out. What's pound dollar been doing? Let me zoom in a little bit. And you can see the pound when you look at it as a whole. You know, this was an interesting one from last week, because when you look at what the pound's done, forgive me, I'm going to go to the daily chart. For those wondering on the pound has been getting crushed, and last week we had the elections that came in, and the pound had been just getting crushed to the downside. A lot of this move to the downside, though, had really not as much to do with the elections coming up or the vote on Scottish independence as much as it had to do with dollar domination in the markets, the dollar bringing it down. When the reason why I would keep an eye on this trend line is because the pound certainly has more room to go up. That would be good for buying the pound yen pair before it would hit off this trend line again. When that vote occurred for Scottish, independence or whatnot, obviously they voted no on it. I had told my students last Thursday that, basically the analysts were saying if they vote no, the pound would go up. If they vote yes, the pound would go down. I said that either way, if the pound comes up to this trend line, this is what I said last week, if the pound comes up to this trend line, I think that either way, whether they vote yes or no, the pound is going to go down, because it's not, after the vote occurs, it's no longer going to be about the pound. It's going to go back to being about the dollar. So this is another one where we have this long-term trending resistance level that came down and through here on the pound, and you see the price coming back up, and it still has some clearance to come back up to that trend line. When you kind of zoom in on where it's been over the past several days, you can almost see this breaking into or forming kind of a longer-term little triangle right in there also. Now, this is another one where when you look at where our pound yen trade is, or it certainly would make sense, because we have room for the pound to move up a good 70 pips before it hits a trending resistance level. But this is another one where we have trending resistance meeting up with a trending support level, to where we might want to look for the pound on the pound itself, on the pound dollar pair. Even though the pound is very strong today, this is one to where you might want to keep on your watch list to look out for it as it's hitting this resistance level, looking for sell opportunities. I know that kind of throws us for a loop, doesn't it? You're like, what the hell, Steve? Come on. This is what I mean right in here. Is, we got a trending support level meeting up with a long-term trending resistance level. This is what we call the horse poking its nose through the fence line. You can see the pound, on that pound yen trade, we have plenty of room for the pound to retrace back to the upside. So the pound yen trade still looks good, because the pound is the base part of that currency. When you buy pound yen, by the way, you're essentially buying dollar yen and buying pound dollar, and both of those look like they can make some movement to the upside. So it's good to follow that PitView for right now and possibly trade that pound yen to the upside. But as it comes up and hits that resistance level, and if it keeps consolidating sideways, the pound, I still feel, is probably going to go in the general direction of where the dollar's going, which has been straight up. That would mean this going straight down. Now I'm stretching things out to just talking about other opportunities out there in the market. But you see what I've been doing here, and here's the point of what I wanted to do today. What is pattern trading, if you will? When we talk about swing trading, when we kind of talk about, trend line breaks and, Fibonacci patterns and double tops and double bottoms and ascending triangles, descending triangles, symmetrical triangles, all of these different patterns, no matter how you look at them, they're all, they all have one thing in common, in the fact that we're looking at support and resistance levels. You can see on here, I have my 4 hours on the global view looking at kind of the bigger picture. I have my 4 hour pair view on here also, but my trigger chart on the 1 hour charts, You know, that's the only PitView things that I have on here. And all I've been doing is really scrolling through these and looking for opportunities. And another good point that I like to make here is just the fact that, remember, you know, trading does not have to be difficult when it comes to screening for opportunities or looking for opportunities in the market or looking for trading opportunities. All we've done is we've kind of been matching up strongest to weakest currencies, looking at the chart, seeing what patterns are developing, seeing where the support lines are, seeing where the resistance lines are, and trading accordingly. Can we do the same thing on other time frames? Absolutely. We don't need stochastics and MACDs and RSIs and CCIs. In my opinion now, you know, as far as all these other technical indicators go, you know, PitView working alongside just regular charts. You know, PitView lets you trade along them with the market makers. The charts let you look at what price is doing. And you have those two things combined, you can use just simple support and resistance style trading and still be highly successful, as we've proven thus far in the class. So anywho, it's 10 o'clock. It's time for me to turn into a pumpkin. Let me go ahead and end class here for the day. I'm going to go ahead and take some things off. And I'll bring up my contact info. There we go. So I hope that was helpful for you. I hope that kind of gave you a sense of just, you know, every trader is different. I know not all of you trade off of, you know, the 1 hour time frame. Some of you trade off longer term, shorter term, whatever it might be. But I hope that gave you a sense of just how I go about looking for just simple support and resistance trades. And if you do have any questions, let me know. You can shoot me an email. I had some emails get sent to me last week that I've responded to. However, I got several of them bounced back to me. So if you sent me an email at the end of last week, if you can resend it or let me know if you received my reply, if I haven't replied yet, you know, shoot it back to me. And I'm more than happy to make sure and put that on my priority list. Most of you are PitView subscribers because you're in the intermediate class, or either that or you're on the 2-week demo. Subscription information you can find on pitview.com/web. Gives you a little bit of a little 10% discount there, but I believe you're all subscribers anyway. Do you have any questions? Let me know. This is Steve Nuri signing off. I hope you enjoyed this little live trading session, and just let me know if you do have any questions. Thanks for coming in, everybody. Bye-bye.